All right. Good morning, everyone. Uh, Good afternoon. Good evening. Understanding that some of you are joining us from countries or regions where it's not morning. So allow me to greet you with good morning, good afternoon, good evening. Yes. Uh, Thank you for joining us, and we want to be grateful. And we are so thankful for the gift of life this morning. Glory be to God. I trust and believe that we are doing okay wherever we are. Yes. If you am loud and clear, drop me a one in the chat. If you can hear me, drop me a one in the chat. If I'm loud and clear, drop me a one in the chat. Okay. All right. Thank you so much, my co-host. Thank you so much. Blessings. I see Michael, Afonso. Thank you so much, guys. All right. So let's get into our training for today. We are continuing from where we left yesterday. We have been doing trading view application Tuesday and Wednesday. So I think we can shift a bit from there and then look at something else, the reason why we are gathering here. So that was the beginning. So yeah, if you are just joining us today, you just need to be patient, or also you need to go and watch our recordings on the Crypto Ambassadors YouTube channel so that you can catch up, especially if you are new, right? Especially if you are new, you can just go to our YouTube channel of Crypto Ambassadors, right? So that you are able to catch up. Okay, so today we are going to shift our attention a little bit from trading view. We are going to look at, we're going to start looking at the candlesticks. All right, we're going to start looking at the candlesticks. So I'm going to share my screen. Probably I can be able to do some writings. Yes, let me share my screen. I hope my network is gonna hold me. I see it is dancing today, but at least I do have a co-host, so I'm well backed up. If anything happens, I think I'll be able to come back. But I pray that it does not happen. Yes, it delays the training. Okay, so um, let me share my screen. Please indicate if I'm sharing screen. Please indicate if I'm sharing screen. Indicate, give me a reaction if my screen is shared. Give me a reaction if my screen is shared. Give me a reaction if my screen is shared. Yes, I just want to all right. Okay, it's going. Okay, so let me do this. Okay. So let's get into our training for today, where we are going to look at candlesticks. So, ladies and gentlemen, the reason why you are here, the reason why you are attending this class, studying technical analysis, it is because you want to have extra knowledge when it comes to the financial market, not only crypto, but the entire financial market. You are going to understand it better as I go deeper into our training. All right. Don't think that the knowledge you are acquiring is only for crypto. You can use it to trade any financial market. Okay. So you should not undermine yourself. you should also be grateful that you are part of this community where we are giving valuable information that you can use to trade any financial market. Even if you decide one day that I'm done with Royal Q, okay, I'm done with Royal Q, right? So, ladies and gentlemen, any financial market, uh, just a minute. Okay, all right. So let's get into it. I was saying any financial market that you are going to get into, you are going to find out that there are too many players. Okay, in the financial market, you are going to find out that there are too many players, or there are too many forces. Okay, there are too many forces. All right. So these forces, they are the ones that are called market movers. They are called market movers. These too many players, these too many forces, they are the ones that are called market movers, right? So these market movers, they sometimes they are also referred as demand, okay? They are referred as demand and supply, okay? These market movers, okay? The market powers, they are called demand and supply. Sometimes they are referred as that, okay? So when it comes to crypto, you are going to find that they are given some terminologies, okay? Yes, we have given them some terminologies where you are going to hear the word bulls, okay? Yes, we call them bulls. That's why we are saying the bull run. It means we're going to have a season where the bulls are going to run, okay? So they are also referred as bulls and bears in the market. Not only that, you're going to also hear words like buyers, okay? Buyers and sellers, all right? These are market movers. These are the only group of people. I don't know, should I call them people? But it is a group that controls the market, that dominates the market, that has got dominance to the market. So they are buyers and sellers, okay? If you are not going to hear buyers and sellers, you are going to hear bulls and bears. If you're not going to hear bulls and bears, someone may refer to them as demand and supply. I'm giving you these terminologies so that you don't get confused. It is the same thing. Demand refers to buyers, okay? Supply refers to sellers, all right? When we say bulls, we are referring to buyers as well. We are referring to buyers. When we say bears, we are also referring to sellers, okay? Sellers, they are called bears. Sellers, they are called supply. Bulls, they are called buyers. Demand, they are called buyers as well. So these are some of the most frequently used terminologies when explaining the market players in the market. So we do have these too many players in the market, right? So these two market players, they are the ones that dominate the market. As a result, they have got an impact to the market, okay? This impact makes them Okay, the impact that they bring to the market makes them to move price, okay, makes them to move price either to the upper side, okay, either to move the price to the upper side or to move the price to the downside. Remember, we are talking about the market. So we cannot talk about the market without talking about the price, okay? We can't talk about the market without talking about the price. So these market players, is either they move the price to the upper side or they move the price to the downside. Okay, this is what they normally do, right? So if it comes to marketing, I mean moving the price to the upper side, we are talking about buyers. Buyers, they are the ones who moves the price to the upper side. While when it comes to moving price to the opposite direction, it means these are sellers or buyers or supply. What I'm simply saying, what I'm trying to introduce to you, ladies and gentlemen, I want you to understand that in each and every market, each and every financial market, okay, you are going to find these two controllers of the market. They come with volume, okay? They come with volume, right? So we do have too many players when it comes to the financial market. Now, we want to engage ourselves in the financial market. We want to participate in the financial market. For us to participate very well, we needed to understand, or we needed to have knowledge, or probably we needed to study about the behavior of these market movers, which are buyers and sellers, so that whenever they are making moves in the market, we are able to trace them. Where are they going with the price? Are they going to the upper side or they are going to the downside, right? We want to study this. How do we participate well? How do we participate effectively in trading cryptocurrency, right? So we needed to understand those that moves the market players, when they are making their steps in the market, okay? How do we acknowledge that they are about to make a step, whether to the upper side or to the downside? So when we are familiar with this knowledge, then we are able to participate very well. Someone is saying, Coach, why are you going to and fro? Where are you going with this? You are going to understand it better when I break it into pieces for you, because you needed to know. You don't just trade blindly. You don't just become a trader. All right. Yes, we are very safe because we are using a software which is Royal Q. All right. But also for you to trade properly with Royal Q effectively, right? You also needed to understand some of this information that we are sharing, right? So the time you acquaint yourself with this knowledge, you discover that you're not gonna only trade with the robot, but also you can also trade any financial market. That is, if you want to, because you understand who are the many players, and when they are making their moves in the market, okay, how do you follow on them? How do you follow on them? So we want to know, how do we happen to follow the market movers, or how do we become part and parcel of this market that we want to embrace? So at a certain point, we are going to become buyers if we are to trade ourselves. We are going to become buyers. At a certain place, we are going to become sellers. Okay, so we need to understand, when we want to join the community of buyers and the community of sellers, what should we look at? How do we acknowledge this? I said that we cannot talk about buying and selling without price. Okay, the whole idea comes to price action. We want to know, if we are to buy, where should we enter? If we are to sell, where should we sell? So we are talking initially about price action. So for us to be better in terms of price action, we needed to study, or we needed to know the buyers and the sellers when they are making their moves in the market. Is this clear? Is this understood? Is this understood? Is this understood? Is this understood, guys? How many yeses do I have? And how many no's do I have? How many yeses do I have? How many no's do I have? Yes. Okay, I've got only one no. All right. So just be patient. Yes, the person who is saying no, Augustine, just be patient. You're going to catch me when I'm going a little bit further with this. You are going to understand it better. Okay? So just be patient. So I was saying that the market comprises of two forces. Okay, two main forces, buyers and sellers. These are the two main forces that you are going to find in the market. So we want to understand, or we want to know if we are to become part of them. Okay, because these are the two power dominance that controls the market. That's why we always say Royal Q does not control the market. We don't control the market because they are big market players. When we say market players, we are talking about big companies. Okay, big companies, they are into this. It's not only us with $100 capital, $500 capital, $2,000 capital. No, we do have big companies that are into this. Those trillions and trillions of dollars that are in the crypto space, okay, they are companies that are there. They are individuals with big amount of capital there, right? So when they are making their moves, how do we follow suit on them? So we want to learn about this skill, understanding the movement of price, whether it is being shifted to the upper side or it is being shifted to the downside. So now, for us to understand this price action, okay, for us to understand this price action, we need to find out a better way on how to understand it. Okay, we needed to find a better way on how to understand it. So the same way we are trying to understand it, there is also a gentleman. Okay, there is a gentleman who was trying to understand this price action. All right, there is a gentleman who was trying to understand this price action, right? So let me give you a little bit of history so that when I introduce candlesticks, you are able to understand this. Okay? Now, I want you to know that we want to find, or we want to learn about price action. So it happened that when it comes to history, it happened that in Japan, okay, in Japan, there was a gentleman called, let me write the name here. Okay. There was a gentleman called Munehisa Homa. This guy was so puzzled on how the market in Japan was booming, especially the rice market. Okay, the rice market. All right. So around 1654, there was rice trading in Japan, that contributed a lot to the extent that the rice seemed to be like their hard currency when it comes to trading. Meaning to say, the rice market dominated the entire market. It was not only rice trading that was there. Remember, in the olden days, we used to have markets of seed, market of seed oil, okay, not only seed, we had market of silver, okay, but now in Japan, by this time, 1654, the rice market dominated all the markets that were available. So the guy Munehisa Homer wanted to find out, wanted to understand the behavior of buyers and sellers of rice. How is he going to determine their behavior? Because he was so puzzled on how price dominated the entire financial market of Japan. So he sat down and said, how am I going to track the behavior of buyers and sellers of rice? Are we following? So this triggered his mind. Then he said, the best way for me to follow suit, I needed to develop something that will represent their behavior, or something that I am going to measure, okay, their buying temperature and their selling temperature. This guy, he sat down and said, how am I going to measure their buying and selling temperatures? Which instrument can I use for these buyers and sellers so that I am able to understand their performance very well? So this guy decided to develop what we call candlesticks today. Okay? He is a gentleman, according to history, he is a gentleman who first invented, who came up with the idea of candlesticks. So he said, I am going to measure the temperature of buyers, the temperature of sellers through a candle. When the price is moving, I am able to study the rising of the price through a candle, right? So that is when the candles came into place. When you are looking at Japan, okay, when you are looking at Japan, Japan introduced candles as early as the 17th century. The 17th century. These are the guys who first introduced candles to the financial market. When the US was coming in the 19th century, late 19th century, they find out that Japan is already a player when it comes to understanding the financial market very well with the introduction of candles. So today we are using candles to measure the behavior of buyers and sellers in the market. That is the reason why we are having this class to understand candlestick charts. These candlestick charts, they're gonna help us to measure the buying temperature of buyers as well as the selling temperature of sellers. Does it make sense? Does it make sense now? Does it make sense before I go deep into the candlestick itself? Does it make sense? Do you understand why we are studying candlesticks? Why we want to study candlesticks? We want to participate very well in the market. So the tool that we can use to measure the behavior of buyers and sellers is by looking at a candlestick. So for you to be able to understand this candlestick, then you need to be in this class and follow through. Are we together? Yes. Do you have a buying temperature? Let me ask you this question. You as a Royal Q trader, do you have a buying and selling temperature? Do you grow emotions when the market is going up? Do you grow emotions when the market is going down? Give me an answer in the chat. When the market is pumping, do you get excited? Do you get excited? when you were trading along and then the market started to go down on that coin that you are trading, what happens? How do you feel about it? When the market is going against you and you are watching that my coin is going into negative and negative and negative, how do you react? How do you react? How do you react? Yes. So when you are into a trade and the trade is going against you, okay, sometimes you feel like taking a cup and hit a TV. Yet the cup and the TV, they are innocent. You develop emotions, ladies and gentlemen. So how do we measure your emotions in the market? Hmm? How do we measure your emotions in the market? How greedy are you? If you are greedy indeed, what are we going to use to measure that greediness? Then we use a candle. So we want to understand this candle well. Okay? Even when you're trading in the spot, you also develop emotions because your high expectation when you're trading in the spot, you want to win the trade, right? Though you are not going to lose, but you want to win the trade and pick another trade. You want to get out, isn't it? So when it is going against you or it is staying days without selling, how do you react to that? Nevertheless, we are saying for you to participate very well in the financial market, you need to understand a candlestick. So the Japanese, they are the ones who were the first to bring or to participate in the market very well when they saw that there is rice trading dominance in their market. So this guy, Munehisa Homa, like I said in history, is the one who was concerned. He wanted to find out how the buyers and sellers of rice are doing and how is he going to measure their buying and selling temperature. So he invented the candlestick. Why candlestick? Okay? Why candlestick? He could have used a line. Okay? He could have invented a line. Okay? Yes. Or maybe he could have used a bar chart. We do have bar chart, right? We do have bar chart. He could have used a bar chart. But why candlestick? Why, when you come to the financial market, you will discover that almost everyone is using a candlestick. Whether you go to Forex traders, they are understanding candlesticks, right? Whether you are trading gold and silver, the guys there, they are using candlesticks. Whether you are trading indices, the guys there are using candlesticks to understand those markets. So why candlesticks? I want us to understand this very well so that you should not undermine the power of candlesticks. So candlesticks, they are very important to you as a trader. When you're doing your technical analysis, candlestick, they are very important simply because candlesticks, they are considered, okay? Candlesticks, they are considered as a visual representation. A visual representation. When I say a visual representation, you can just look at a candle, then you are able to see what is happening in that particular coin in the entire world of crypto. Let me bring this chart over here so that I can give, let me pull it. How can I pull this back? Okay. All right. Let me hide this indicator so that I remain with a candle. Okay. So this is what I'm saying, that candlesticks, they are a visual representation of what you are trying to look at or what is happening in the market. For example, if you want to study or if you want to know what is happening in the market of this coin called Cyber, you can just look at this candle and see, or you can just look at a couple of candles. Okay, you can just have a look at candles, then you will be able to determine, okay, when it comes to price, just by looking at this, is the market going down or the market is on an upward movement? Just by looking at what is displayed here, ladies and gentlemen, just by looking at these candles here, okay, looking at the visual representation of this, is the market generally on an upward movement or the market is going downward? Give me an answer in the chat. Just by looking at this, is the market generally going up or it is going down? Give me an answer in the chat. When I say the market, I mean candles, they can be used as a visual representation of what is going on in the market. So if you are following me, just by looking at that, is the market generally on the upward or it is on the downward? When I say generally, I'm simply saying on its way up, it is retracing a bit, but the journey is on an upward. Okay? So generally, is the market going down or it is going up? In that particular asset I was showing you, it is on the upward movement. It is on an upward movement. So the candles will help you understand the visual representation of the market. It is easy for you to understand the market using candlesticks. Okay? It is easy for you to understand the market using candlesticks. All right. The candlesticks also, they are flexible. Okay? The candles, they are also flexible. I'm answering the question, why candlestick? Candlestick, they are flexible. They are easy for you to read the market. Let me give you an example. Okay, these are candles, right? What you are seeing on the screen, these are candles, right? I want to change these candles. I want to change them. All right, I want to change these candles. I want to change them. I want to put them to line. I want to use a line here. I have removed the candles. Now I'm using a line. Between those candles and this line, which one is easier for you to read the market? Which one is easier for you to read the market? Give me an answer in the chat. Between the candles and the line here, which one is easier for you to read the market? Which one is easier for you to read the market? Give me an answer in the chat. Okay, somebody says a line is better for them. All right, I'm not gonna argue. Okay, I'm not gonna argue. Somebody says a line is better for them, not a candle. All right, let me bring this one here. Let me bring this one. Let me change the line again, and I bring bars. Let me bring bars here. Let me bring bars here. Right? Yeah. So which one is better for you to understand the market? Between bars, lines, and candles. Which one is better? Which one is flexible for you? Which one is flexible for you? to read the market. Which one is flexible? The bars, the candles, the lines. Which one is flexible? So I see the majority, they are saying candles. So it means candles, they are easy for one to read the market. Okay, candles, they are easy for somebody who is a beginner to understand the market, right? Yes. So candles, they are flexible. We are still answering the question, why candles? Okay, why candles? So candles, they act first of all as a visual representation of the market. Secondly, candles, they are flexible. They are flexible. Okay, let me add something to flexibility of candles. Okay, let me add something to flexibility of candles. If I am able to change these bars and then bring those candles back, okay, someone can just have a look. Someone can just have a look at one candle and say, I am going to make my entry here when the candle is starting. I'm going to make my exit here. There are people who trade today just by looking at candles. Just one candle, they can trade just by looking at candles without even drawing support and resistance, without using other extra tools. Because how far they have advanced when it comes to understanding the market. So they can just open a chart like this. They can just come to their trading view. They open a chart like this. They are able to see that, okay, this market generally is on the uptrend. Who is controlling? Buyers. All right. So I'm going to lay a trap. I'm going to wait for this candle to close. Okay. I'm going to wait for this candle to close. I'm going to enter with the next candle. That's how flexible candles are. So you can trade the market just by looking at candles without even using other extra tools. That is when you are advanced in the knowledge, right? Yes. So that is the goodness, or that is the unique about candles. All right. That is the unique about candles. They are a visual representation. Not only a visual representation, these candles also, they are flexible. Yeah, we can get valuable information about the opening of the price, the closing of the price, just by looking at one candle. All right, so before we close, let me address this thing now. These candles, as a visual representation of the market, they are given because there are two forces that are in control. So we have given colors to these forces. Okay? We have given colors to these forces. That's why you are able to see that we do have two colors here, which is green and red. All these are candles. But now, for us to know, this candle is for a seller. What color are we going to use for sellers? This candle is for a buyer. What color are we using for buyers? So in this scenario over here, we are having green candles that represents buyers. Okay, now we are segmenting the color when it comes to candles. So in this market, green represents buyers, while red represents sellers. So wherever you see red candles, you should know that that is the behavior of sellers. The one who is controlling, if there is any dominance, it is sellers. When the market is rising, you are able to see that green candles are going up. It means buyers, they are in control. So the green candle represents a buyer. The red candle represents a seller. Is that clear? Is that clear? I am breaking bit by bit. After understanding why a candlestick, then we are also coming to give colors. If you remember very well, I said that when it comes to the color of a candlestick, you decide what color you want to give. Okay? You decide what color you want to give. It is not a must that it should be green. It is upon your choice. Because when you tap on these candles, let me tap on them so that I show you what I'm talking about. It is the setting. It is the setting. So I have given the green color for buyers and I have given red color for sellers. If I don't want to use green, I can use probably white. I showed you yesterday if you were here. Okay? Let me just do it quickly so that you see what I'm talking about. Or probably let me use blue. Let me use blue. Okay? Let me use blue. Right? Let me use blue instead of green. Then I save. Can you see now? Can you see the color that was green? Now it is blue. So it is a matter of choice. But you discover that when you are studying candles, a lot of traders, they prefer green and red. That is the most favorite colors. Green and red, they are mostly used by traders to understand the market when it comes to candles. Is this clear, ladies and gentlemen? Does it make sense now? Is it clear? Is it clear? Is it clear now? Is it clear? I have given you a history of candlesticks, how candlesticks came into the world. Yes, how did we start using candles? Why candles? All right, why candles? I have given you two market players in the market. So you are going to choose which one are you going to become. Okay, you're going to choose. When you are becoming one, what should you look at or what is representing you? If you are becoming a buyer, you are represented by what in the market? If you are becoming a seller, you are represented by what in the market? That is the building block. That is the building block. Now, tomorrow, we are going to start understanding candles better. We're going to start looking at parts of a candlestick. When you look at that green candle, when you look at that red candle, it comprises of what? When it comes to buyers, when they want to enter the market, where do they enter and where do they go? When it comes to sellers, they want to enter the market. Where do they enter and where do they go after entering the market? So tomorrow we'll be looking at parts of a candlestick. Is that clear, ladies and gentlemen? I don't want to give you too much that you're going to fail to understand. You should find the essence why we are studying candles. Yes, someone is just used to trading with Royal Q. He just set up the signal, then he's done. Does not know that behind that signal, what are the guys doing? Okay? Behind the signal that you are setting in the Royal Q robot and you make money, the people that are giving you signals, what are they doing behind the scenes? So we want you to also become part of people behind the scenes. Yeah? Yes, we don't want you to wait for signals all the time. You can come and look at this market yourself. With confidence, you are able to pick and say, seems like the market is on the upward movement. Yes. Yes. So don't just think that signals are just created. People, they just guess. They are people who spend time on the market. Okay, there are people who spend time on the market to generate those signals that we trade. All right, so these are baby steps that we are doing here. So be patient with yourself. So tomorrow we are opening up the cane of worms of candles. The cane of worms of candles. Yes, that's what we are going to open up. So today, allow me to leave here unless there is a question. Someone with a question, I'm ready to get questions now. I'm ready to get questions. Yes, there's no guessing. We don't guess here. We do technically analyzing the market. We do predictions. We do predictions. Hey, I'm not doing Bollinger Bands and RSI. I'm not doing indicators here. Please. We are not doing indicators here. I'm doing introduction to candles. Okay? Yes. I'm doing introduction to candles. So I don't want to bring confusion. I started doing an indicator. Right? Anyone with a question on what we have learned so far? Anyone with a question on what we have learned so far? Yes, yes. Yeah, you are going to learn, guys, when to enter the market and when to leave the market. This is the building block. We are just at the early beginning of the class. You're gonna learn how to enter the market, how to leave the market on your own. You can only do that when you are acquainted with candles. You cannot understand when to enter, when to exit. If you don't know a green candle starts from where and it goes which direction, a red candle starts from where and it goes which direction. All right. So your point of entry in the market matters. That's why sometimes we don't win trades. Okay. Point of entry matters in the market. Time frames, they don't represent future or past data. Time frames, they do not represent future or past data. Time frame is a time frame. You are looking at the market in what picture? Is it a smaller picture or you are looking at the market in a bigger picture? That's what time frame represent. Okay? So they don't represent future or past. No. They only represent bigger or smaller picture of the market. Is that clear, Harun? Emmanuel, why candles shrink? So you don't understand why candles they shrink. It is power. When a candle is growing, there is pressure in that candle. It can be a selling pressure or it can be a buying pressure. So it will shrink also when that pressure is exiting. You're going to understand it better tomorrow when I go deep into a candlestick. Okay, Emmanuel, attend tomorrow's class. You are going to understand why candles they become thin, why candles they become bigger. Okay, you're going to understand that tomorrow. Green candles represent buyers. Red candles represent sellers. Michael, green candles represent buyers. Red candles represent sellers. Those are two buying pressures in the market. If you are to use green, okay? It is the same time. The class is the same time tomorrow, 6:30. That is if you are in the southern region. When you are in the eastern region, it is 7:30. Okay? If you are in Kenya, in Uganda, it is 7:30. But if you are in South Africa, it is 6:30. That's the time. Yeah. So if you are in Uganda, it is 7:30. That's the time that we meet here. Yes. Okay, so let's end here for today. We are going to meet again tomorrow when it comes to this class. But for other Zoom trainings, We do have a Zoom at 9 a.m., 10 a.m., depending on the location. East Africa, 10 a.m. Southern Africa, it is 9 a.m. There is another Zoom coming. Yes. Yes, it is. I think it is same time. Yes, it is same time. South Africa and South Sudan. Am I correct, guys? Am I correct, guys, when it comes to Ghana, I think it is 2 hours behind. If it is 6:30 South Africa, Ghana, I think it is it 5:30? Is it 5:30? I think Ghana, they are 2 hours behind. If it is South African time, yes, I know. Ghana, they are 2 hours. Is it 2 hours behind? Guys, am I correct with the time? You can correct me if I'm wrong. You can correct me if I'm wrong. But Ghana, they are a bit far. They remain behind with time. Yes, they remain behind with time. Yes, so if it is 6:30 here, it means in Ghana, it should be 5:30. Am I correct? 2 hours behind. Yes, they are 2 hours behind. Yes, so you just need to calculate that. You just need to calculate that. Nigeria, it is 1 hour behind. Okay. Nigeria, it is 1 hour behind. So it is 5:30. Okay. All right. So let's meet tomorrow, guys, for the same class. Then we'll continue from where we have left today. I appreciate you guys. May you have a lovely day. Yes, you can take advantage of the market. I think the market is picking up. The market is picking up when it went further down. Yes, it was giving us opportunity to buy more. Yes, Leader VC, you have been missing in action. You have been hiding. I'm glad that you are here today. Yes, thank you so much for pitching up today. Yes, you have been missing in action. You are making a lot of money. I think that's the reason why you are now hiding. You're making a lot of money. My leader. Yes. All right, guys, thank you so much. Have a lovely day. My co-host, yes, Leader Doris, great. I really appreciate. May you have a lovely one. Hopefully, we're going to be together tomorrow morning. Yes. Thank you so much, guys. Take care and be safe. More money in the market. Yes, there is always money in the market. Yes. Go and make your long and shorts. There is more money in the market. If you are advancing to futures, go and make more money in the market. All right, so let's call it a day. See you all. That is when God gives us life again. Yes, because this is a gift. We may meet now, 1 hour from now, we are no longer together. So it is a gift that we are embracing each and every minute. So thank you so much, guys. We love you all. Take care and be safe. Bye-bye for now.